Hey guys, so here's another episode of the weekend market breakdown, and let's get right into it. All right, so first we're looking at um, AUD CAD, and wow, it's kind of slow with the internet. So first we can kind of see this area of value, right? And um, man, I wish I was on an iPad, but that's all right. So first we can see this area of value, and this is kind of considered a correction. And let's invert this. What I was thinking about before, right, for this corrective area is that if we break down and see a consistent level of um, breakouts. So in this case, I was expecting this to come down as it followed by all these other areas. And that didn't happen. And good thing that we're waiting instead of just um, entering with no patience and no confirmations. So in this case, I'm glad I didn't get in. I was waiting for a breakout for a continuation, and if it happened two more times, continuation, correction, continuation, correction, continuation. If it happened a few more times, I will absolutely get in, as it's again big correction here, and we're looking for a impulse move to come to the downside. But then it happened, so I'm glad I stay out of it. And to the next one, I don't know why my screen is like so laggy. This is already looked over for me. This area is kind of a dead zone to me that I don't really see it until it breaks out. Two ways we can play this. All right. So W is weekly, is kind of big for me. So two ways we can look for this, and this is considered a double top for me, and it's an area of value that's valued to me because if we're looking at this right, and we can kind of see this area, 1,260 pips, 3,871 pips. So this is almost 30%. And when it's 30% to me, it can be considered a M structure, right? An M structure in this case. And when we see something like that, if it's something around 40% or 50%, I wouldn't want to get involved in that. I don't know what it is, but I've experienced a lot of times where those are not considered area of value, and it wouldn't reject when it forms a certain structures up here. So this is how we will go about to play this, right? So first thing I will see is right now, man, I wish I was on my iPad so then I can draw better for you guys. But if this was to come up, right, and form a structure, an ascending structure, something like this, right, we can kind of see a corrective leg here, impulse move here, and then let's imagine this is another corrective area. I would take a sell on that, right? I would take a sell on that. That's about 270 something pips, and that's really, really good. 35 to be conservative and not greedy. So that's about 1 to, I think 1 to 7 when I bring this up. About 1 to 7, 1 to 8 a little bit. But this is considered area of value for this if it forms something like this. Now, the second play here is if it goes all the way up and it forms a flag, and this flag is a structure that we get in on, we would take a buy, right? If it's around this area and it forms a flag, I would still consider it. But if it's up here, it's absolutely, right? If it's up here, it's absolutely because it's touching area value. Now, when I first told you, right, man, it's so slow. When I first told you, the reason this is area value is because when it touched this price point, it rejected 1,257 pips, right? 1,257 pips is considered area value when that happens, right? Now, a lot of things needs to come into play. 30% rule, it needs to almost look like an M structure. So in this area, if it does something like this and it's not rejecting, it's showing disrespect, meaning this area, it doesn't matter to them, right? So when it forms a flag and it's not rejecting hard, it means it's ready to go to the upside, right? That's how I will go about to play this trade. I think AN, more of a dead man area. It's a no man's zone, I would consider, because you really don't know where it's going. And I would like to fast forward this because, again, this is because I want to go over some of the stuff. So right now, not a lot of things is happening. I don't like how this is like so laggy. So sorry for the lag, but if you want to just forward a little bit and skip the lags. So similar to something like this, CAD JPY, something similar. I'm pretty sure this is at the M, this 40% area. I don't know, but it's not forming anything that we're looking for right now. So I wouldn't even bother getting into this. It's so messy up here that I'm not ready to get involved. But Euro AUD, more of a continuation. So as it went all the way up here, we'll try to see something like this if this happens. I mean, we are looking at a daily structure, so this is more like a mountaintop, right? So if this happens something here, I will consider selling. If it forms a flag, I will consider buying. So if something happens, let's wait for an opportunity. Let's put a yellow on that because it's a lot of things to form before something happens. So I'll put a yellow on it to watch it. This area, right? EuroCAD, right? EuroCAD. The reason I took this trade was because this leg right here, it's showing that it's becoming a trend of continuation, right? So first, what happened was it was a breakout, right? Breakout, an impulse move, right? Followed by a correction and come to the downside. We spotted this as a corrective area, right? Corrective area. So with that, followed by an impulse, another correction, impulse, another correction, right? And then it's a continuation. But we want more confirmation. So a correction, continuation, another correction, continuation. And then the reason we got in this because we saw a perfect setup for us for a sell, right? And that's how we got 152 pips. And right when it hit the TP area, we got right out. We take our profit, we get the hell out, and start over, right? Start over. And the reason I didn't get rid of this because I wanted to go over it in the weekly breakdown, but we spotted a correction, continuation, correction, and we spotted a pattern where the flow of direction for the market. So that's how we took that trade. Moving on to the next one. This is the one that I didn't get in because of the detailed structure. So remember how I told you earlier about the double top area value and such. This is almost the same thing here, right? So if we go, right, this is like a lesson here. If we go all the way up, um, come on, we can kind of see what's going on here. It's almost the flow direction is going to the upside, right? Going to the upside, but it doesn't mean this won't come with a rejection, right? So this is considered area of value. First top, right? First top, right? The rejection area here is a lot. It's comes all the way down to 547 pips. So when it touched this area of value, it went down. So what happened here was, so now we see the first top, and now we want to see a second top. But for the second tops, there was no setup and structure for us to sell to the downside. There's nothing we can get in. But instead, we spotted a flag, right? And in this flag, it's showing that it's not rejecting as hard as we think, as this area is area of value. So if it's not rejecting as hard as we think, it means that the market is contemplating to go to the upside. We're not looking to we're not looking to sell, and we see a flag structure. Flag structure. If we know how to spot these, it blows up, man. But the reason I didn't get in this trade is because the details in the market, in the structure. The detail is this right here. This is not really considered a valid section 2 for me. So that's why I didn't really get in that, because I'd rather not lose capital on this. Remember, if we just get in and whatever we think and just impulsively get in, capital is our livelihood. We don't want to play that kind of game where mess around with the capital. So I really made it was tempting, it was super tempting, but I really made like a decision to be like, don't be tempting. Follow the strategy and stay alive. Most importantly, stay alive. If you freaking die, that's a whole. Now you need a new batch of money. Now you need to work your ass off again to get another batch of money to get a profit. You don't even know if you pass. It's so much hard work. So I'd rather just stay out of it and just see what happens and grab data. This is something that we can grab data on, and in the future we can use for, right? In the future, if we spot something like this, oh shit, it works. Now it's worth getting in. Now it's worth it. Now it's like, okay, it happened in the past, so let's see if it happens again. But if you want to be more safer and be like, okay, that was only one data. Let's see if two, right? Let's see if it happens a second time or third time. Now the fourth time, now you can be comfortable getting in these trades that you thought it would not work. So this is one that I'm glad I didn't get in. Well, not really glad, but missed out. But we need to look at it on the bright side, because we can look at this, right, and say, well, fuck, I missed out on 200 pips. 200 pips, 35. That's 1 to 6 ratio. 1 to 6 ratio, 24,000. That's about $16,000, right? No, I think a little more than that. 6%. 4 divided by 4 is 6. 6 times 3, 18,000. That's 18,000 right there. But hey, you have to look at things on the survival instinct and strategic. I can't speak, but in a strategy sense. All right, Euro USD. Euro USD. I did get in this, right? And this is one of those trades where you should not get in, right? I know I should not have gotten in. So first of all, the first thing is we spotted the trend of direction for this, right? We spotted impulse, continuation. We can see the breakout, right? It's showing proof of direction, right? Now, I know not to get into this. It wasn't that I was naive enough to get into it. Now, the rules to this is if it's a high pip level trade, you have to put details of structure on the pedestal, right? Because flow of direction is not enough. You have to look at your go-to setup. You're comfortable, how comfortable you are. So this on section 3, for me it was a no-no, but at that time it was super droughty. I just took the risk on it, which is really not worth it, but I took it. But for these trades, you have to keep in mind, and myself included, is that you have to keep in mind that if you get in this trade, okay, fine, but you better damn well only go in once, right? If you're going in once on these temptations, these tempting trades, just go in once. Don't go in twice. Don't go in 3 times. Then, okay, now you screw yourself up because 1 to 5, we're taking 1 to 5 ratio, 1 to 6 ratio, 1 to 8 ratios. We can take up to 1 to 10 ratios. If we're taking, if we're in 1 to 5 ratio and you wasted 3 of your lives on this stupid trade, right? This impulsive trade, then you set yourself up for failure, right? You're not managing your trades. You're not doing right trading management. So if these trades, you say, oh, I really want to get in this. I really want to get in this 1 to 6 ratio. Look at this. Go in once. If you go in once, that is worth it. If you go in twice, it's still like, all right, but don't get in the third time, because if you get in the third time, you just killed 3 of your lives. Because that means the next new trade, you should not be effing up on, or else now we're going into the red zone, right? So these are the things that we have to keep in mind to stay alive in this game. Capital is number one. Number one is capital. Number one is staying alive. Number two is your strategy. Are you sticking with your strategy, right? GBP CAD. So that's another one we missed out on, but I'm okay with it. I'm okay with it. So here's why, right? First, we identify flow of direction in the market. We identified it, right? Still not, still a little bit, but I see what's going on here, right? So for example, 1, right? 2. Now it's number 3. Why not, right? Technically, you can kind of see this, what's really going on. I wouldn't consider this small one because it's just like it can just go up too. But this one's kind of considered. Now you can read it. Okay, this came down, a correction, and it came down again. It didn't go up. It came down again impulsively, and it created another correction, right? So when that happens, okay, now this can be considered. I wouldn't consider that. That can be just another correction within itself and just blow up. But now you can kind of read this now, right? Now, the market is almost like a book. You need to be able to understand how to read this book to know what happens in the next chapter, right? So what's going on here is when the market was back here, I could technically still read it, right? Now you can kind of see it, and then you're ready to read. I can kind of still read what's going on. I can see that the best probability of what's next to happen, what's to come next, is to the upside. Whoops. It's to the upside. This is inverted. That's why I say upside. This is the right side. But I like to invert it. Take a look at things how I feel comfortable with it. Whatever you guys are comfortable with is you guys. But this is how I'm comfortable with it. But anyways, we can kind of see what's to come next. But how do we get in this, right? So the first thing is, I kind of saw this as, all right, I kind of read this as impulse, correction, continuation, but I wanted things to develop. So as it develops, right? Oh, I'm not comfortable with it. I'm not comfortable. Okay. So stop real quick. How do I stop it? Okay. Jeez. I'm trying to stop it. What's going on? The fuck? Yo. Chill. Yo. What the? Okay. Whatever. Anyways. this last leg here is very corrective, that I would be willing to risk to get in on it because of what everything follows, like what was behind everything. So I would be comfortable getting in it. But the problem here is I consider right I considered this area as section 1. But what actually happened was the market considered this area as section 1. But you have to, here's the thing, you have to be able to stand your ground on this, because if this is the case, right, you clearly can see this, mark this as a section 1, like a wedge formation. We can't second guess ourselves. If the market considered this as a section 1, that's fine, right? But you don't want to get into the realm of, all right, because like if you go here at section 1, what's the question? Why not here as section 1, or why not here? This is what we considered in the best odds of what would happen. It didn't come to fruition, but that's okay because the market is the market. The market is always right. You're never right. Whatever happens, the market is more right because the result is from the market, and it happened to consider this area as section 1, and we missed it by a little bit, like almost, I think, like just like such a tiny bit, like probably like 1 pip, 2 pips. But that's fine. That's fine that I missed it. At least we were able to read. See how we were able to read where it was going? It's just that our position to get in was bad. Um, but you have to stick with your strategy. Don't just do things because now you're like, oh, well, this happens here. Now I want to consider this here. No, you saw the best results for this. This clearly is, to us, how we trade at section 1. But again, the market considered this. So it is what it is. You miss some, you get some, right? 6% Euro CAD that we got in on, right? And then we didn't second guess ourselves. We got in on was what? I think it was like, where the hell was it? Where the hell was it? It went up. Right? It's about this area. We got in, get up, right? 150, 30, what, 30 pips? 5%. One trade, 5%. You have two or three trades in a month. Easy 10% or 12 or 15%. Remember, we take up to 8%, 10%, 1 to 10 ratio. It doesn't seem real, but if we play it right, if we read it right, and we're careful with this, we have 80% success rate. Now, it's not 80 right now because I took some stupid trades, right? You need to be able to control yourself, and I'm a victim to that as well. Just because I'm preaching about this doesn't mean I mastered all of it, right? There are a lot of more things, how we get in trades, how we stay out of trades. We look at DXY when we look at USD. So there's a lot of other things, but for now, this is what I got. I've looked at the other GBP and USD pairs. Not really anything interesting, but we'll wait. That's the best thing to do right now. Wait for the best results. We don't want to get in something just because there's no trades. Sometimes when we don't take trades, we actually make money staying out of the market. All right, this is it for me. Hope you guys have a good weekend. Hope you guys took some value on this. Peace out. Have a good night and have a good weekend. Please like, comment, and share if you found value in this video. I really appreciate it, and helps out the channel, and it supports this channel. Thank you so much. See you next time.